financial inclusion and how we can make banking better and more effective. So we've been, our experience, my personal experience has been in a number of countries, in Congo and Sierra Leone and Rwanda and a few other countries where we've been involved in local economic development. And I think that's really what's been driving us as a fintech. Because I think the birth of Clic.world was out of the frustration that we saw in local economic development, because you can't do local economic development with some of the constraints of traditional banking. And I think that was the challenge, I think, that gave birth. And we then had a number of founders who had the same kind of experience. And that gave birth to us saying, well, let's have a blank sheet of paper and let's actually see how does all these emerging technologies, what can we do to do things better? So we're not a bunch of techies that had a cool tech that we're trying to find a square peg in a round hole. Mm-hmm. We actually had a clear understanding of the problem, and then we started looking at what technology fills that problem. So that's really our background.
Thank you, Andre. That's very good introduction. I know we're going to dive into that and give us some more insights on how Clic.world is trying to solve the problems that we are facing, especially around financial inclusion. Moses, I want to jump into you in the first question. Over to you. Technology means a shift in the way organizations handle business, both internally and externally. Moses, as the bank in its ways has led the industry in digitizing many of its operations for the customers at Standard Chartered, what would typically come across to the branch, and how are your customers responding to this shift? Can you give us some insights, challenges, and how this is coming through?
Thank you so much for that question. I think you allow me give some brief of our journey, how we've been able to evolve. For a long time, for the last possibly 15 years, we've been trying to become a digital bank across the different markets how we do operate.
Yes.
And trying to be able to use technology to be able to service the customer in the most effective way. But 2015 was a critical year for us because we took a step back to reflect on where are we and what will the future look like. But at that time, we found three major areas. One, we had different systems in every country. I'm part of an international organization. Imagine you have an online banking in Uganda, another one possibly in Nigeria, another one in Kenya, which were different. And the customer we are serving is global. For example, if you know Samsung, Facebook, iPhone, Twitter, there's no Twitter for Uganda, it's Twitter. The same customer is accessing a global platform. The same way, the same customer required to have the same service in any market where they go to where your bank operates. Yes. And then the third thing, that since you had different systems, being able to do an upgrade or an update on the system, you're required to do it in 100 different systems, and the teams in tech will tell you that's a lot of work. So we chose to do a step back and invest some size of amounts of money, in excess of close to $2 billion, able to enhance the systems, to be able to, one, build one for many, so that whatever you build, the customer who is in Nigeria will get the same experience in Uganda and leverage the same experience in Tanzania or in Singapore to be able to use the same platform. But the second thing is that the same customer who is now global can also be able to enjoy the benefits that you have across your footprint, which is very key and which is very important. And then third, which is also very important, is that if you want to improve and enhance a system, you can do it once across the overall all the three systems. So we've seen the benefits on that. One of them was the launch of our digital onboarding digital bank, largely in Cote d'Ivoire in 2018. And because of the taking a step back in 2019, we managed to roll it in Uganda. And in the same year, we did it across 8 different markets in Africa in 1 year, which was a key milestone for us. Along the way, there have been some learnings. One of them is that being an early setter, you have some setbacks.
Yes.
But there are some advantages. There are some early adopters, and the customers who are able to adapt the technology becomes very important, and those become a raving voice for you to go in the market, able to advise as much as possible. But the second thing, which is very important, that then they also give you a chance to learn more on what you can continue to improve and do different. And then you will have a base of customers which want to be served differently and possibly also may not adapt the technology as fast as possible. Those also become learning points in terms of sensitization, education, and being able to understand what value you can give to the customer. So we believe along the way there have been some ups and some downs, but the journey is a learning experience. And even finally for our team, previously in the banking sector, you had to enter the bank, open up an account, and wait for 3-4 days, and then the whole system was arranged that way. But as we talk, people in the bar opening an account on Sunday evening, at 2 a.m. in the night, opening up an account, and the entire system along the way should support that customer to be serviced effectively. So the learning of the teams have had to go through has been massive, and we are so happy that even as individuals, our evolution has been key. So as a bank, we believe that the biggest area which, however, came as a benefit is that then it gives a chance to be able to serve and reach somebody who could be in Arua, who could be in Ajumani, who could be in Moroto, can afford to open up an account digitally and be able to come into the bank minus coming, looking for where a physical presence could be.
Thank you. Thank you, Moses. I picked up a lot. 3 different issues that you've had across your systems in multiple jurisdictions. How do you integrate them into one seamless system? And with upgrades over 100 different platforms into one, and they spend over $2 billion. That's a massive undertaking. I have a follow-up question, but let me jump over to Andre before I call on Noha. Andre, could you please tell us more about how financial service players are navigating the changing role in the marketplace and the need for banks to play a greater role in the consumer digital ecosystem? Also, featuring the platform space, can the both players satisfy each other?
Yes. I keep on forgetting this button. I think that's a question that we can run an entire workshop on, and I think we should.
Yes.
It's a question that can keep us busy for a while. I think my first observation is it's a question that's probably about 3 or 4 years late. It's a question that banks, if a bank asks that question today, I think it's a bit late. That's my first observation. Over the last 4 years, we have seen the change gradually happening, but we now see an acceleration. We're seeing a major acceleration over the next 18 months. So the first part, you asked, what can a bank play in the customer's ecospace? I think my answer is they should. A bank is currently a single-purpose institution. And I've got always a delightful story I share with my son. At his 18th birthday, I wanted to buy him an expensive watch. And he was absolutely like, Dad, what do I need to do with that thing? It only can check the time. You know? And it was one of those, literally, it was one of those things that stuck with me and changed my mind. It's like, it's a single-purpose device. And the generation that is coming up now is used to multi-purpose.
Correct.
Okay? So a bank in its traditional form, when we talk about retail banking, is very much a single-purpose institution.
Yes.
And as a consumer, I am part of an ecosystem. Okay? So I believe that the bank needs to become part of that and needs to become a player in that ecosystem. And that ecosystem is also lifestyle driven.
Yes.
Because my ecosystem and somebody sitting in Vietnam or somebody sitting in Gulu or may be totally different. okay? But it's an ecosystem. And I believe that's one of the key things is banks need to realize that not only is there an opportunity, they can expand their revenue streams in those ecosystems. Because Moses was saying about how much money they spent on their systems. And I'm quite I think I can challenge him that a lot of the money they spent, we can probably achieve the same now for a fraction of a fraction of a fraction of the cost that they've done, and I can do it more securely. So I think payments, remittances, things like that's going to become commodities. It's going to go down to zero. So the ecosystem, I think, for banks to play in the wider ecosystem will open up more revenue streams, definitely. But that's what the customers are demanding. The second one is the platform space. That one, I think, is going to be an interesting to see over the next 18 months. I believe, and I've always been a firm believer, that the platform space, the banks need to be in the platform space. And I think it was due to, I don't know why, but third-party aggregators and all sorts of other players that came in filled that gap. I believe that there's going to be consolidation. And I believe that a lot of the traditional, what I call third-party aggregator space and so on, is going to be consolidated in the banks as a platform. Now, only thing is, the platform space is a much more complex and a much more expensive place to play, and I think the consolidation there is going to be not that easy. Okay, so I think you may find that over the next 2 years, some banks are going to only play in the eco space and become major players. Others may actually migrate towards the platform space, and you'll have probably a few that will play in both spaces. Because I believe the platform space is probably where there's going to be a big fight, but only a few survivors. Whereas as an institution playing into the ecosystem is going to be much, much easier.
Thank you.
Okay.
To capitalize on what Andre have said, I think the answer is yes, in terms of the ecosystem, the digital ecosystem. The question is how many are going to be in the digital platform. I think the consolidation and the focus is all coming out relevant right now, because as we're trying to solve the need for the unbanked and inclusion,
Correct.
and the new ways, borrowing a lift from your son, we need multi-purpose function devices that solve tomorrow's problem, not yesterday's problems. Now, leading to the next question, I want to go online and ask Noha. With the drawn of the new business models, is there room for diversity? And what structures are needed in place to support a woman in the tech space?
Thank you very much, Moses. I mean, before I attend to that question, I wish to actually comment on some of the inputs of Moses and Andre, actually. Really interesting insight, gentlemen, that you've just put in there. I mean, coming from banking myself, I'm a banker after all, I really hear where Moses is coming from, doing all the right things to make sure that the technology infrastructure is up to date and that the digital channels are in place and that the customer experience, whether it's through the branch, online banking or ATMs for merchants and the POSs, this is wonderful work that you're putting in there. Us as bankers need to put in mind that how people do banking, whether it's individuals or businesses, is changing. And that relates to what Andreas just said, is that end of the day, we are all in business to make profits and to serve customers. So missing that customer centricity element and doing what we believe is right, as compared to being more focused on how our customers are living and trying our best to embed financial services as an integral part of their day-to-day life, I believe this is what is missing within the financial industry. And this is one element that fintechs have focused on, and they have done very well so far. Whether we are, and I need fintechs in its broader terms, I'm not just focusing or referring to banking fintechs, I'm also referring to insurtechs. I'm referring to fintechs operating within the capital markets, whether buying or selling side. So fintechs are customer focused. They embed themselves and the services that they offer in the
Yeah, you're back now.
Oh God.
Yes.
I was mute.
For a fraction of a second there. So yeah,
Okay,
go ahead.
okay.
Yeah.
So again, which part, guys, did you not hear, or was it all of it?
No, it's just a small part, just not more than 10, 15 seconds.
Okay,
Yeah.
all right, then wonderful. So that focus on being part of customers' life introduces multiple models in embedded finance, embedded insurance, and as a result, now you can see some services like buy now, pay later, for example, that is scaling significantly. And this generation is not going to be walking in a branch asking for a loan or opening an account or requesting to sit with a relationship manager to discuss financial matters. If the financial industry did not manage to embed its services into the day-to-day lives of consumers and businesses, they're going to lose a lot of market share to players who manage to do that and do it effectively. Is there a place for inclusivity? Well, I always claim and ready to defend that point of view is that technology naturally is inclusive. So if you look at why fintechs, insurtechs, and the like have emerged, you would find that they emerged to actually close a certain gap in services offered in the market for certain segments of people. If we look at, put yourself in a banker's shoe. Now you are taking the strategic decision on what market segment to target. You have one market segment that has a really thick profit margin. It doesn't require much resources to serve profitably, and that, of course, is the high net worth individual segment, the upper middle class who are employed in large companies and have a solid payroll and track history of financial services, and the large corporates, perhaps the medium ones, who have the potential as well to grow. So there was a segment excluded, naturally, not because bankers are bad, not because we don't want to serve everybody, but because it was the right economic decision back then. Because serving people using that business model that is mainly reliant on brick-and-mortar branches as well as a human factor, that human resources, is really expensive. So no matter how hard you tried back then, before the emergence of the technologies that can actually make it feasible to serve other market segments that has thin profit margins and gives you that ability to scale at a really affordable cost. That technology was missing back then. Now it's there. So we do not have an excuse as a financial industry, whether it's banking, whether it's insurance or the like, not to deploy technology and customize business models to serve that segment. Again, not out of the kindness of our heart, but because this is where growth is. The number of corporates, large corporates in any country, how many are there? What is the percentage of the economy that those corporates actually represent? 80% of the economic growth that is going to be achieved within the coming 5 to 10 years around the continent, not just in Uganda or other countries, is going to be driven mainly by micro, small, and medium businesses. Where are we when it comes to serving those businesses, those companies that come in with a different set of needs, a different set of processes and ways of doing business and serving customers differently. Where are we? We haven't learned to serve those segments as financiers. We haven't attended to their needs. We haven't taken the time to study them and to understand how they do business in order to be able to customize the right financial solutions to fulfill those needs. So there is, of course, an element of inclusivity, and I'm not just talking about individuals, but also small and medium businesses. Women's case in that situation is not much different than men. So if you look at businesses owned by women, that micro, small, and medium businesses owned and operated by women versus those that are owned and operated by men, they are both treated poorly. They are both missing that customized financial services to fulfill their needs. The gap actually does not exceed 6 to 7%. So if you have 50+% out of the businesses that are led by men, micro, small, and medium businesses that do not have access to loans, for example, then percentage of businesses that are owned by women who face the exact same issues is 6 to 7% more, pushing like the 60%. This is where the opportunity is. Technology is inclusive because it gives us the means to serve everybody profitably. We just need to take the time, of course, after the mindful decision to tackle that segment as an area of growth and opportunity to generate more profit, introduce new business revenue streams and the like, and just go ahead, serve it. Us as banks do not have that capacity. Partnerships with fintechs, insurtechs, and the rising tech-enabled businesses actually can give us an opportunity to get part of that cake without having to change our corporate culture, without having to spend days to convince an investment committee to put money in there, or to convince the compliance and legal that this is doable, to argue and have those discussions with central banks. Let the fintechs, insurtechs, and other tech-enabled businesses actually do that for you. Partner with insurtechs, fintechs. Invest in insurtechs, fintechs as a bank or a financial institution, and have them do the work for you. Again, it's a collaborative scene. It's no longer competitive. Fintechs are there to stay, and I actually believe that they are the natural evolution of today's financial industries. Like in 10, 15 years' time, all the financial institutions are going to be tech-enabled businesses because the population, the customers are going to be different. Their lifestyles, how they interact with technology, how they approach service providers is going to be totally different.
Thank you very much. Yes. No, thank you very much. No, that's very informative. And picking up from that, technologies are going to drive the future, and it's going to be inclusion in everything. I want to jump over to Moses to continue on that discussion a little bit. I'll give you about 2-3 minutes, and then Andre, I'll also give you that. Watching our clock, we want to make sure we wrap up quickly. What are the real threats and opportunities for business as they're embracing technology? Mind you, remember you are in the consumer space, and with these changes, how are you navigating that?
Thank you so much, and good to receive input from other panelists. I think what is coming out very key is the evolution that banking has had to go through or is undergoing is massive. And as bankers, we realize that, and we've made commitments and progress at the different stages, depending on which organization it is, to be able to make inroads on that. The opportunities that we see are mainly three. There is a significant base of customers, of people, of population that still needs access to financial services, but most importantly, in a way that resonates with their lifestyle and wherever they are. And that's why the discussion about playing in the platform and ecosystem space becomes key, because they're able to tap into those particular pools wherever they could exist. So that base becomes very important. The second one, which is key, is that a real need and pursuit towards affordability as much as possible. The days of us having high bank charges and those that no longer matter. Yeah. So affordability becomes very key. A lesson that we picked on as a bank when we were studying our client patterns as we went into digital onboarding, where you have these multiple pools of clients, possibly 6-7 times your number, was the customers were pivoting towards something cheaper, accessible. If data tells you, then you've got to compare within your legacy models and give the customer that benefit.
Yes.
If I can acquire you digitally, it's cheaper for me, possibly 30 times cheaper to serve you digitally than I would do in a physical branch, then the benefits should flow through possibly a free account with additional benefits that the customer will get from the value. The third area is accessibility. Wherever I am, I want to access my banking. Yeah. Therefore, being able to go with me wherever I am, beyond just only coming to an app, but can you go with me to a supermarket? Can you go with me to with my child's school? So going with me wherever I am as a bank becomes very important. Where do we see this as key for bankers to be able to tap into some key partnerships? And I do agree with Noha and together with other panelists that we don't have to reinvent the wheel. There are key players which fintechs do play a critical role that we can partner with. And as different players, we're already having different engagements at different levels to be able to play into that. Where we see the major challenge is mainly one is on cybersecurity. It's a major worry for all of us as players. Being able to ensure that all our different people who come onto the platforms can understand the basic security, but keep them as safe as possible. Any impact onto onto that platform and any loss of funds means a loss in confidence in the platform you have built or whatever you have developed for them. So I believe there are many opportunities, but the major one is on cybersecurity. And the final threat which you see is key is if we do not harness the opportunities available in each other and keep operating as different parties. But when we come together, we could have gotten more benefits together for the sector, and most importantly for the client or the consumer who will all be serving.
Thank you, Moses. Andre, over to you. I want to continue on that part of the conversation on the digital ecosystem, understanding that there are new threats in technology, trying to serve the unbanked and the financial inclusion. I'll give you 2.5 minutes so that we can try and wrap up in the next 3 minutes after that. Andre, over to you.
Financial inclusion and banking the unbanked. One of the biggest hoaxes, I think, around. And I think that's half tongue-in-cheek and half serious, because I want us to break that concept of banking the unbanked and financial inclusion. Why does a group of people in Gulu prefer to keep their cash? It is because a banking system, when I call traditional banking system, is a capitalistic banking system that doesn't fit within the socialistic banking environment of Africa. There's no trust there. Okay? So, and that was one of the key things that we discovered years ago. And that's why we started building a new model. Everybody talks about the tech, but the problem is actually we had the wrong model. Our model was wrong. Mm-hmm. So instead of getting that farmer into the bank, let's take the bank into the farmer's environment. Let us, and the technology is available right now. That's what we've done. That group of 1,000 farmers in Gulu can become a super micro bank, fully automated. Okay? Take the banking into that space. So in other words, social financial ecosystems is what we're seeing in Africa. And I talk about specifically, and I believe that this is, we talked earlier about it, Africa brought mobile banking in, we were a decade ahead of the rest of the world. I believe that social banking is going to be similar, and if we adopt that, it's something we can export to the rest of the world. And that is, and I think COVID has woken up around the world of communities. I'm hearing people are now, communities are coming together. Now, for us in Africa, it's natural. That's how we work, as communities. We trust each other, right? So I see social banking and being, bringing the human back. I hear everybody's about the tech. It's about the tech. I believe we need to bring the human back. And I'll give you one example. Moses was talking about cybersecurity. It doesn't matter how much money his bank is spending, there's always going to be some Bulgarian or some Russian or some Chinese that's going to be one up. Okay? I do not believe it. Now, when we started this project, about 5 years ago, that was what we looked at. And we actually came up with a non-technical solution for a vault in our app where funds can be protected using, which is not security related, which is personal relationships. Okay, using my 4 friends to actually co-sign digitally, and the blockchain technology makes this so easy these days to have co-signers and multi-signature. But I can have my 3 friends, and my 3 friends, when I want to move money out, I just phone them and says, can you sign with me? So we've looked at putting human relationships as a security factor.
Yes.
And I think that's the kind of thinking that we need in this space.
Thank you very much.
Thank you.
Yeah, thank you, Andre. Noah, 1 minute. We need to wrap up. I know we are cut short of time, but I know this has been a very good discussion.
Thank you very much, Moses. Well, perhaps one point to share in here. I mean, Andre and Moses have covered it beautifully, and I'm glad that we're all coming together to more or less the same conclusion. Usually we have someone from the development world with a banker and an entrepreneur. Usually there are different points of views and different perspectives in the life. But I'm really glad we're reaching that point. That's like music to my ears. The challenges and the risks of adopting technologies are going to always be there. What we do with risk is that we mitigate, we build risk mitigants in place. We optimize the risk based on the expected profit that is going to come out of it. So let us not look at cybersecurity and fraud and perhaps potential business discontinuity and the like as obstacles on the way. Let us look at them the way they are, position them correctly as challenges, and then use technology to actually close those risk gaps and optimize the risk associated with the utilization of technology. And that's the beauty of it. Technology can close gaps, can mitigate risks that are mainly emerging from the utilization of technology. Let's keep that in mind. Those are exciting times for the financial industry, operators and practitioners, and for customers as well. I mean, they're being heard. They're being focused upon for the very first time in many years.
Thank you.
So, thank you. Yeah.
Thank you. I want to thank our panelists today. Moses, thank you for the contribution and what you're doing at StanChart, trying to create a seamless platform that can enable all consumers to work seamlessly regarding of the jurisdiction you're in. Andre, thank you for your insights around the digital ecosystem and solving the need of social banking and being able to have inclusions for everybody so that we can address all these problems. I also want to say thank you to Noah, who's virtually as well, who has given us insights on on the take in the women and diversity and inclusion. On behalf of FITSPA today, I would like to thank everybody who has tuned into this session for having been able to listen to us, and I hope you had a very good deliberation. I would like to thank everybody for joining us, and before I leave, I want to say to my colleagues, thank you for taking the invitation and joining us here today. We appreciate you very much, and as we go into the next discussion, I want to hand over to our moderator to take over from here. Thank you.
Thank you very much, Henry, and your amazing panel of discussants. Just a few quick highlights from the discussion. It was quite a loaded discussion in a very, very short amount of time. I think we kicked off with StanChat that's been on a journey to becoming a digital bank. My main takeout there, I think it's been about, 15-year journey, you said? Yes. My main takeout there is that it is a journey and it will take significant investment, and you need to think about standardizing experiences and also think about the future. And obviously, being early starters presents numerous teething challenges from an integration perspective, but it's always worth it, and that's something we need to be cognizant of as we operate in this space. And with technology, just as there are early adopters, we will have laggards, but that's also an opportunity to innovate around awareness, communication, etc., so that no one is left behind. And that takes absolute commitment. Financial institutions need to be alive to the fact that consumers exist in an ecosystem and they need to evolve and play in the ecosystem, which is for the most part lifestyle driven. And this is what consumers demand, but it also is an opportunity for financial institutions to develop more revenue streams. Banks have an opportunity to also migrate towards the digital platform space, which will be cutthroat. So a choice needs to be made between ecosystem versus digital platform. And broadly speaking, fintechs have gotten it right when it comes to being customer-led, and banks need to quickly evolve in the same direction. Obviously, there is need for collaboration between banks and fintechs. That's an absolute necessity, and there is no need to reinvent the wheel. Cybersecurity remains a huge threat, and that's a conversation that we heard earlier on. But also financial inclusion and banking the unbanked generally sounds great, but we must have the right model which effectively leverages technology to take the bank to the unbanked space. So we need to be thinking about social financial ecosystems. In short, social banking. I hope I have pretty much summarized. Excellent. Thank you so much. Thank you. Please take your leave. So ladies and gentlemen,